What a week we have had in Bitcoin. And, here we are with the godfather of crypto, Michael Turpin, joining us. So many questions for him. But actually, you know what? He already kind of predicted most of the things in our
Pretty
previous
much.
calls. So, Michael, tell us what are we like? What did we see last week? And with this crazy drive that is happening, what do we make out of it?
Sure. Well, as I've said since last year, it takes about a year for the bear market to play out. There's always some different narrative that drives it. I even said, as we were on the way up, that the narrative would very likely have something to do with DATs unwinding. It does not mean that MicroStrategy is going to unwind, but there's an awful lot of unprecedented FUD out there that's going to zero. And it's just like, come on. If you look at the numbers of where MicroStrategy was in 2022 after the bottom of that bear market, I saw a tweet on this. I'm going to just give you the estimated numbers, but basically, I believe that they were about 16,000 Bitcoin underwater in terms of their share valuation minus their debt, so their MNAV, and now they're about 500,000 Bitcoin above water, right? So in other words, they could go and pay off all the debt that is owed by STRC right now and other smaller instruments. They got $2 billion in cash. And they've shown the ability to go and sell additional strategy preferred stock, which is actually the better deal for them right now. Because, okay, great, you're going to go in and add a little bit more dilution to strategy. But if you're adding, say, 1.5% dilution, and the share price goes down 8%, which seems to be what happens. It's a pretty good buy then for the future, because strategy right now has more Bitcoin and will have more Bitcoin, even if they sold, 50,000 Bitcoin, which I don't think they need to do. They would still have more Bitcoin than they did in July. In July, they were over $400 a share. Now they're at 80. The price of Bitcoin has gone down 50%. They've gone down 80%. Everybody seems to think they're going to go down another 80%. I just don't see that being rational. And with strategy, it's even more profound, because with strategy, we hit a low this morning. It opened at like 71, which is just insane. I mean, the smart money has been going and buying in and out and dividend stripping. In other words, they go in, the price is never more than 100, right? 110 cents, I think, is its all-time high. And so you buy in, right before the dividend date, and then you'd sell it. And, you might lose a little bit on the difference between buying it $100.10 and then maybe selling it at like $99.50 or something like that. But the reason you do that is so that you have the opportunity to catch the dips when people panic over Bitcoin. It dipped down to 92 in November. It dipped down to, I think, 92 or 93 in February. And so this was something that was pretty predictable. It's a high stakes thing, because you're going to probably lose maybe 0.5% every month that you do that on the dividend stripping. But you are keeping the cash there for when you need it for other things, like you could have done put half of it into SATA instead, which was paying a higher dividend without the same kind of drama as strategies had later. But I just came from the Bernstein Financial Conference in New York yesterday. Smartest people, in finance were there, and some of the major family offices, and everybody I talked to was buying, not selling at $75. Because again, you're effectively getting, 15, 16% dividends, and then a one-time price appreciation of like 25% when it comes back to 100. And it will come back to 100. It has to, because, all these people saying, oh, it's going to go under. I mean, I saw an analysis today that said the pros will come in and buy it as scrap when it's down to $30, because then they're getting over 100% dividend. Sarah's not going to sell it. He's not even selling shares below 100, and he won't. He doesn't need to. And, the only way that strategy unwinds is if the price of Bitcoin goes down to about 10 grand and just stays there forever. And I don't think anybody sees that as realistic, other than Peter Schiff.
Well said. A lot of people are talking about that this could be a possible classic short squeeze. Do you agree with them, or what's your take on that?
I think there'll be small short squeezes, but not a big one yet. I think that I see two likely scenarios going forward. Both probably about 50-50. Maybe 60-40 on October being the bottom and 40% of July being the bottom. So we will go down. We will go down somewhere between, as I've said for a long time, worst case about 39K, like 40, it's a little wick down and then that's it. Or most likely, low 50s and maybe a wick down of 49. So I see, I don't think that the low is 58. We're never going to go lower. I think that's a very unlikely situation, that this was the bottom, any more than I thought that 61 was the bottom, 60 was the bottom. You usually have one final flush, and it's rapid and brutal. And then at that point, everybody's going up. I'm out. It's going to zero. It's going to 5K. That happened in 2022. That happened in 2018. That happened in 2015. I mean, history isn't just rhyming. It's been repeating, right? And, and I see. The only question is the fear so great right now that it's not even going to last until October, because you're going to have just, perps and all sorts of, the finance markets have been sped up with the addition of, all the actively available perps and Deribit and, all the sorts of things that just were not either there or as profound, as well as sort of the ability to do things through IBIT, shorting IBIT, et cetera. So the fact that things have accelerated means that panic in the market can go, through barriers much quicker. We certainly saw that when the bubble popped at 126 and, pretty rapidly went down to 80K. And then it, rocket fired up and people are saying, oh, it's over with, the bear market's over with, the shortest bear market ever. And I was like, no, doesn't work that way. No 2-month bear. And then it went down a second time in February, and it's like, okay, now it's really over. 4-month bear, shortest ever. And I was like, no, it doesn't work that way. Certainly possible we could have an 8 or 9-month bear for a number of structural reasons, but I still think the most likely scenario is we're going to probably still have a very weak July. We might have another rundown into, like, say, 52, 53, and then kind of go up from there and muddle around the mid 50s, and then maybe even go up a little bit in August, and then have one final flush in just September or October, because that's often where a lot of the bad news in the stock market happens. If you look historically, when was the 1929 crash? When was the 1989 crash? When was the Great Recession, crash, right? They were all September, October. And so in a weak market for Bitcoin, if you add in a stock market problem, oh my God, then everybody's like pulling everything out of everything in Bitcoin first. And that's I think the most likely scenario, that we, maybe go down into the low 50s in July, go back into maybe touching 60s again in August, muddle around for a while with some lower lows. And then sometime in September or early October, we have the final flush, goes down into the 40s. Everybody's saying it's going to go down to zero. Peter Schiff is going to say zero. Mike McGlure will say, see, I said 10K, it's going to go to 10K and not come back anytime soon. And, and they'll be wrong. And that's the time to buy. And, historically, it's the bottom when it doesn't come back fast. Because when it comes back, when you have a V-shaped recovery, that's not the bottom. The market demands capitulation. And I didn't think that was true in the early years. I think it is true now. Bitcoin market, the whales are happy to just hold forever and just wait. They already got out whatever part they wanted to get out over 100K. And they're hoping to get back in at 20. It's probably not likely, but they got their buy orders in. And, and they'll be happy to go. And they're already buying now, net buying now. And, they're, I think on average, they're thinking it's going to go down to 40. If you follow some of the more obtuse, parameters that have always been right so far, one of them is CVDD, which is coin value days destroyed. And that, last I checked, had us around 45K at the bottom. And there's a few other things. I mean, again, very obscure, things that only, chart geeks follow. But, that's all saying that we're not done yet.
So 45 is scary to most of them, but a brilliant opportunity if you have tried to figure out your cash flow to get in at that point of time.
Well, I was going to say, I mean, I think that if you were buying today, you went all in today, you do okay. I mean, it's been bouncing between 59 and 60 this morning. Went down to 58 on Coinbase 2 days ago. And, you're looking great when it goes to, like, I think our worst case scenario for the bubble top after the next halving, sometime in late 2029. I think our worst case is about 180. And so if you get in at 60 and you get out at 180, you're not crying, right? You're up 3x. Is the stock market going to go up 3x in the next 3 years? I don't think so. Is gold going to go from 4,000 to 12,000? Could, but not as likely as Bitcoin to go to 180. It's only 50% higher than the last high. But if we get the supply shock and the super cycle that I've been talking about, I've never said it's here already. I've said it's coming. We have a good shot because all the structure is in place to go and flip the narrative on retail, which stock market, the stock market does that all the time to retail, right? They have them panic buy at the top, they have them panic sell at the bottom, and then they are the counterparties, and they want more cheap Bitcoin right now, and that's why you got a lot of short seller FUD out there. They would love to get MicroStrategy down to like $40 or $50 and then buy a bunch of it after they shorted the crap out of it, and that's just how Wall Street works. And same thing with Bitcoin. They'd love to get $20,000 Bitcoin. They're not going to get it, but they'd love to go and like put the FUD out there to, scare people into selling their Bitcoin that they bought at 100 and sell it at 50. And, that's how Wall Street makes money. And that's how, I'm not forcing anybody to sell at 50, but I'm happy to buy it.
Let's take this moment and talk about your book, which is the Bitcoin Super Cycle. Please show us the book. There you are. Bitcoin Super Cycle by Michael
Available
Tompkins.
in stores that are distributed by Simon & Schuster, and much more quickly available on Amazon.
Brilliant. Tell us, an interesting anecdote from your book that will trigger all of us to quickly go to Amazon and order your book.
Oh, you want me to give one? Gosh, there's so many. I mean, I think I pretty accurately predict what's going to happen here. I said that we were going to hit the high of this cycle in the fourth quarter of the year after the halving. We did. And then I said it was going to take about a year to hit the bottom. And I said that the bottom was going to be somewhere between 60 and 70% off the top. I said that 2 years ago when I wrote the book. And, I'm still sticking with that. So, 60% drop puts us down into the like around 53K maybe. And 70% drop puts us down around, I have to do the math right now, but it puts us in the range I was talking about.
Yeah.
Now, I thought it was going to be from a higher high. I did not think that we were going to, I thought that the most likely scenario was that we were going to go 3x the halving price. I knew that whatever the price was going to happen in that in that, because the time-based, the calendar, as I mentioned on the subtitle, how the crypto calendar can make you rich, right? The calendar. And you have to, I mean, above all, you have to look at the calendar and not the price. The price is important too. The fear and greed is important, but the calendar has been the most important. And when the time is up, the time is up, and so the time was up. I thought there was a good chance that we might have gone a little longer into the fourth quarter and gone a little bit higher. I think if we had not had sort of all the interesting shenanigans that happened on 1010, that we might have, broken through that kind of 120-ish wall. But, Wall Street was approaching a lot of the top whales with, a once in a lifetime. I'm sure it'll happen again, but up until that point, there was very few chances that you had in 2022 or in 2021 or in 2017 at prior peaks to go in and offload several $100 million of Bitcoin without rattling the market, or to go and convert it to securities, to IBIT, and then be able to get much better rates on loans and mortgages, because you got a listed, active, high liquidity stock, as opposed to Bitcoin, where historically people were having to, if they wanted to borrow $1 million worth of Bitcoin, or on their Bitcoin, they would have to put up 2 to 3 million in reserve. And we saw from Celsius and BlockFi and FTX how risky some of the prior ways of Bitcoin lending. I mean, now most of the Bitcoin lending things now don't go and hypothecate them the way that they did. But then the rates reflect that too. So whereas with the security, you can go in and get pretty good terms if you turn your Bitcoin into IBIT, and I think a lot of the whales did that, and a lot of the whales also just cashed out, they went in and said, okay, I'm gonna well, again, I think the smart thing, if you follow it, it depends on your tax status, right? If you're in a high tax state like New York or California, and you bought your Bitcoin at $1, you really have penalties for completely cashing out. But if you go in and you just transfer it into a security, and again, I'm not a tax advice expert for New York, I don't, and you basically then just take loans against that. There are, I believe, ways that you would be deferring your tax, and if not eliminating it. So there are, things that Wall Street knows in terms of being able to cash out with tax benefits for old time Bitcoiners. And one of them was STRC, right? I mean, STRC, you were able to go in and take your cash components, and you're not cashing out Bitcoin, but you're basically giving cash and helping Bitcoin, because the cash was used up until recently to buy more Bitcoin. So you're helping to build the floor price, so you don't get like a cascading effect downward. And you're also getting 11.5%, which is probably about to go up. And if you buy strategy today, you're effectively getting 15-16% plus a one-time dividend of 25% when it goes back to 100, which it will.
And what do you think in 2028? So two predictions I would love to know from you. One is 2028, just during the halving. Where do you see the Bitcoin price?
So it's a range. The one thing I can say definitively is that it'll be above the last halving, because it's always happened. As long as the amount, I mean, Satoshi said this himself, wrote about it. He said as long as the amount of new money moving into the Bitcoin ecosystem between halvings is greater than the inflation effect of new Bitcoin coming in, the price has to go up. It's math, supply and demand. All the volatility that happens in between is fear and greed, and that's when I came up with my 4 seasons of Bitcoin thesis. That is, half of the book talks about that, where I identified 4 distinct quadrants within each halving cycle. Bitcoin springs the day of the halving. Price goes flat, even though miners are selling, somebody else is buying because they know the price is going to go up, and it's flat until you get a new all-time high. And as soon as you get a new all-time high post-halving, price goes up like a rocket ship. That's Bitcoin summer. When the bubble pops, that's the first day of Bitcoin fall. And when you hit capitulation, that's the last day of Bitcoin fall, first day of Bitcoin winter. Bitcoin winter, unlike people just generically saying, "Oh, it's crypto winter" because they feel bad. In winter, it's not going down. It's hit the floor, and it's making the slow, painful road back up to spring that people think they're never going to see spring again. But just like New York winters, you do eventually see spring, and you always see a new halving high, and then a new halving, and then new price, and then new all-time high. I believe that we will have a high that is not only a halving price that is not only above the last halving price of 63,900. I believe that it's going to be, for the second time in a row, above the 2025 all-time high. I haven't decided what to call that season because Bitcoin winter ends either upon the next Bitcoin spring, the halving, or a new all-time high. But the new all-time high, when it's only happened once, did not have the effect of being Bitcoin summer. Because Bitcoin summer, which is the new all-time high after the halving, takes off like a rocket ship. And we had a wick based on the ETFs going live that went above for a couple of days the all-time high from 2021, and then came down to the halving price, which was below the all-time high. And so I don't know if that's Indian Spring or January thaw. I have to come up with a name for it, but I think we're going to have that again. I think that because we had sort of a truncated high, I mean, I was expecting, 3x the halving price based on diminishing returns, 100x having the high in the first halving, 30x having the high the second halving, which are extraordinary numbers, by the way, in any asset class. And then only 10x in 2017-18, and because of, 2020-21. And we only had 8x because of Biden's war on crypto and the kind of reset that we had during the pandemic crash and the rapid rise of interest rates coming out of the pandemic. That all kept it to about a 20% macro disadvantage, and we only went up 8x instead of 10x, which again, who doesn't like 8x? If gold went up 8x, we'd be 32,000 right now. So then the diminishing returns have always had diminishing losses too. So you narrow the range, right? So you had 100x up and then 85% crash. And then you had, so you're still ahead though. You then had 30x up and an 83% crash. And the third halving, you ended up having 8x up and a 75% crash. So the decline in profits, diminishing returns, has been logarithmically decreasing, whereas the bear markets, the diminishing losses, has been arithmetically. So you didn't go from like 85% down to like 8% or something. You still had more than 50% each bear market. And my projection in the book was that we were going to go, as I mentioned earlier, 60 to 70%. And we're already approaching that range, and I think that's where we're going to end up. And so by those diminishing returns, if we do not have a supply shock, which causes the super cycle, which is the second part of the thesis of my book, is that we'll never see $1 million Bitcoin if you don't have a supply shock at some point. Because if you want to follow the numbers, right, 100x, 30x, 10x, 3x, we didn't even make 3x, we did 2x. The next one would be about 1.3x, right? So that means if you had a halving 150, let's say, then your all-time high would be maybe, what's 30% over that? Like, 200 or something like that. And that's all possible. But, and then the next time, what would it be? It'd be like 1.1, maybe 10%. So, and then you just have flat forever. And, I don't think that the lift in halving price is going to get us to $1 million. Whereas I think the supply and demand disparity, it's certainly possible that all the people who ever wanted Bitcoin have it now. Certainly possible. I think it's unlikely. Wall Street is certainly putting together the narrative, after so many years of saying it's a scam, it's a Ponzi scheme, it's rat poison squared. Now all of a sudden, now that they have a product to offer, they're saying, oh, you should put 1 to 5% of your net worth into Bitcoin, and please use our ETFs to do it. And so if you figure that, even just Morgan Stanley alone, I think is 14 trillion of assets under management. I think Schwab is around that number too. You're talking like 35 trillion between just two of those institutions. What's 1% of that, right? I mean, it's 350 billion. I mean, what would 350 billion do to to an asset class that right now is barely over $1 trillion? And and I think that's just from two players. So I still think that Bitcoin will be worth more than gold in the next 20 years. And I do believe that we're still on a path to hit $1 million Bitcoin in the next 8 to 12 years. Or the next couple of cycles. So first opportunity, which is unlikely, would be the 2029 peak. That's 3 years from now. The second opportunity would be 7 years from now. And the third one would be like 11 years from now. And I think 11 years from now, when you're talking the bull market after the 2036 halving, is the most likely. At that point, your inflation has gone from, we're at 0.88 annual inflation right now, which is the first time we've been less than gold. Gold averages around 1.5% to 2%. After the 28 halving, we're going to be at 0.44. So instead of having 450 Bitcoin mined a day, it's going to be 225. And then 4 years after that, in 2032, it's going to be 112. And then, for the first time, you're going to have only 62 or something like that. I mean, well under 100 Bitcoin per day in 2036. And I would gather that by then, we're not going to still be at 4% of the world having any Bitcoin, including, Bitcoin in the form of ETFs or participation in digital asset treasuries. I would hazard to say that it's going to be at least 10%, could be 20%. Well, even at 10%, that's 2.5 times the demand that we have today. Where is that coming from? Where are the Bitcoin coming from? Well, they have to come from current holders. And since, forget about all these institutions driving the train now, they still only hold about 15% of Bitcoin, right? I mean, it's still the retail and the whales that still hold 80% plus. And, that's the government, of course, has maybe 5% across all the governments. But, they know how to play the game, the whales. I mean, some of them just hold forever. And there's a number that, plus there's also maybe 4 million that may be permanently lost. We don't even know about Satoshi's coins, right? Sitting there in 22,000 wallets, which of course is a protection against quantum. I just kind of reiterated in the report that came out today. And so, I think that to go a long way around answering your question, I think that we're going to probably be somewhere around, in my opinion, probably about, somewhere between 120 and 150 at the next halving. And if it's, and I think that we'll probably once again hit the new all-time high just before the halving, sort of early 28. It doesn't matter how deep the bear is, it's just a stronger recovery. And so going on to 40, that means that, if we get up to, 180, you've made, 4.5x. If we, go down to 40 and we go up to like 250, you've made 6x, and I think that the bull scenario is you have a supply shock, and that comes in probably 2029, when all of a sudden, you only have, 225 coins per day. Sailor's back buying way more than that again. Strategy's been all resolved and it's back to par for quite some time. And SATA and other DATs are going and doing other digital credit things, competing to pay more yield. And then you've got a much higher percentage of ordinary investors from the RIAs and from other institutions owning, maybe 2 to 5% of their net wealth in their IRAs, et cetera, in their 401k plans as Bitcoin. And so, that means you end up having a day that the price goes from, say, you know, 180 to 210 in one day. That's not that extraordinary. It's been a lot of days where there's been 15% jumps and just panic ensues. I need to have more Bitcoin. I need to have more Bitcoin. And then all of a sudden you maybe go down a little bit and then it goes up to 240. And like that's when all of a sudden retail just jumps in. I got to put all my money in there. I got to mortgage my home, and then the bubble pops soon thereafter. But again, if you get that higher high, even for 5 minutes, if you get over to 300,000 or 400,000, that sets the high that then the math is based on everything else. Where's the low going to be, right? If you only hit, 150 as a high, I think the next low is going to be around 50%, right? The diminishing returns and the diminishing losses. You're not going to go from a 65% drop, 85, 83, 75, 65. You're not going to go to 10%. So, but, at the same time, if you end up getting to, say, 350,000, even if it's only for a day, that means 50% drop is still 175. That's a pretty good floor. Even though people will be like, oh my God, Bitcoin's below 200K, it's dead.
You know, what you're saying. I really wish that a lot of, not just the millennials or the boomers, but even the Gen Zs are taking a very hard listen, because, like I say earlier, we have been sold a dream. We have been sold a narrative that perhaps is not healthy. Getting into meme coins and doing the 1000x or the 100x. This is the gentleman who actually has predicted Bitcoin cycle rightly for over a decade. And when he is coming over with his expertise, I think everybody who perhaps considers them a cool crypto investor from someone who is a degen should pay attention when Michael Turpin is speaking. Michael, thank you so much for your time. We are going to connect next week again on the Friday, and let's see what the week has to offer. Thank you so much for your time once again. And
Look
by the
forward to
way,
seeing
great.
you next week. Yes.
Yes, and I was saying, by the way, great shirt. I need to match similar to yours,
I
maybe
wanted to
next
have
week.
a bunch of orange on today. I got my Bitcoin mug and I got my orange shirt on. It's yeah, it's I got it in custom in Hong Kong.
Okay. Thank you so much once again for your time, and for everybody watching us out there. Highly recommended you to go and check out the Bitcoin Super Cycle book by Michael Turpin. If you can't find the link, DM me on whatever social media platform you find it,
You
and
can
I
find
will
you can
send it
find
as
it,
well.
and I also update my book on my LinkedIn, which is Michael Turpin on LinkedIn. Every day, I do fairly long posts that are longer than I could put on Twitter. So anybody can follow me on my name. It's LinkedIn /in Michael Turpin, TERPIN, and I do regular updates on the cycle in my LinkedIn.
Thank you so much for your time once again.
Okay, thank you.